Welcome back, everyone. Today we'll be taking a wee dive into Unilever, a favourite dividend stock in many a portfolio in the UK and even in the US. The only company I could imagine coming close would be the likes of Procter & Gamble or the likes of Nestle or Mars. In terms of how many brands they own, Unilever, it's about 400. Now, why are they worth watching? Well, they've got a pretty decent dividend. They're of a fair value at the moment and they're trading at a good value compared to peers and industry. They do have a bit of a high level of debt and the dividend has been a little unstable over the last year, so that is something we will certainly be looking at. Now, there are 5 websites we'll be exploring today, and the first one is Simply Wall Street, although I want to go over to the one and only Unilever's own website. No better place to research and get to know a company than, well, their own website, of course, or the investor section, either or. If you want to go into analytics, for me in this section, I just want to look at what brands they're rolling with. So, they own about 400 brands. And as you can see, straight off the bat, we have Ben & Jerry's, Vaseline, Surf, Dove. We have Lynx, Marmite, Pot Noodle, Magnum Ice Cream, the white one is my favourite. Hellmann's Mayonnaise, one of my favourite, the real one, also my favourite. We have Cif, Domestos, Tresemme, and many, many more that you will have certainly heard of. You can view the whole list here on their website. Now, all these brands have what are called moats. In fact, Unilever itself has a massive moat. And, you know, as for anyone unfamiliar with the investing lingo, a moat essentially round a castle in the medieval provided a wee bit of defence, and for any company that is regarded as having a large moat, it means that they have a brand or a product or a service or something about that company that makes them extremely difficult for competitors to put out a business or anything of the sort. And with brands like these, Ben & Jerry's, Magnum, look at all these brands. They're not really going anywhere. They will still be in the shelves and bought in supermarkets across the globe. And many of them are probably not going anywhere anytime soon. Think of Coke, for example. You know, it's very, very... It's nearly impossible to imagine a future that you don't see the likes of Coke or Pepsi. Now, back over to Simply Wall Street. I use this for all my analytics and I have the premium version, but you can all check it out for yourselves. Links are all in the description for all these websites. Now, they are currently trading at £40.95. Their ticker symbol, ULVR, and a market cap of an impressive 103.6 billion. They are up 11.4% over the last 12 months, and they're currently down 2.3% in the last week, currently riding at about £42, and as you can see, they've dipped about £1. Now, when it comes down to their competitors, we have Haleon, PZ Cussons, and Reckitt Benckenheiser, Estee Lauder. Now, Procter & Gamble, for me, would probably be their biggest competitor in this space. The other ones, whilst they may touch on the odd, product line, no one would really come close to the likes of Procter & Gamble for a competitor. And we'll see that later on over on Google Finance. They also agree with me in rating them as one of the top competitors of Unilever. Now, if we extract out to the last 3 years, we can see they've had a max price of $48.92 and a minimum of $33.28, which was surprisingly not during COVID, March 13th, March of 2020. Most companies, that was their lowest point. In fact, it was another March. March seemed to be bad luck every 2 years. Wonder what 2024 is going to hold, because that was, of course, the Russia-Ukraine conflict. Now, news. There's nothing major to report on within the last few months now, which for some people that's a good thing. They are considered a pretty low volatility stock in the industry of personal goods in the UK, so that's something to bear in mind. They were founded in 1894, so a pretty old company. 148,000 employees, CEO Helen Jopie at the moment. You can, of course, have we pause if you want to read a wee bit more into them and their products that they stock. Pay ratio 20.3 times and a price to sales of 2.1. We can see here that they have a gross profit margin of 46.23% and a net profit margin of 10.37. Next earnings date that you will need to put in the calendar if you're looking at this company is February 9th, 2023. Current yield 3.5%, pretty reasonable, and a payout ratio of 76. We'll be having a look at that later in the video. Okay, Valuation, they scored 3 out of 6 here. When we go down to peers, they score much better than Haleon or Estee Lauder, and pretty similar to PZ Cussons, which again would probably be one of their main competitors. I am going to cut Estee Lauder up, for example, and we're going to put in Procter & Gamble. Where are they? There they are. Submit. Procter & Gamble are 24.3, so for a sort of apples to apples comparison, they trade a wee bit better than their peer of Procter & Gamble. Industry, they are also below the average at 25.2 times. When it comes to their fair value and a discounted cash flow model, they are 3.2% overvalued. Fair value sits at 39.63. Now, we will be having a look at the intrinsic value model later on in the episode on Alpha Spread, another website very useful for looking at any stock. Down to future growth, 8.4% forecasted annual earnings growth. Pretty good. As you can see, when we bring up free cash flow, they have about 6.4 billion euros in free cash flow, which of course is a mighty number, and that is basically forecasted to grow in the coming years as well as their earnings. Now, for a lot of people, especially in the dividend front, that is obviously a really positive sign. Had a wee bit of a dip into 2020, of course, COVID related, no doubt, but they've maintained their profit margin of between 10 and 11% over the last couple of years. And operating expenses have in fact not increased. They've actually went down over the last few years as earnings and revenue have grew. Nice. Down to financial health, we can see they scored 2 out of 6. Now, whilst they do have 23.2 billion euros in short-term assets, they do have 28.94 billion in short-term liabilities, 33.09 billion in long-term liabilities, but not to fear, they have about 61.69 billion in long-term assets. Now, when it comes down here to their debt to equity history and analysis, we can see they hold about 32.3 billion euros in debt to their 22 billion in equity. When we throw in the cash and equivalents, they have about, it closes the gap significantly by about 6.5 billion euro. Now, their debt coverage is well covered by operating cash flow at 24.6%. More importantly to me, their interest payments are also well covered by a 27.4 times coverage. We can see a wee bit of the makeup of their balance sheet here. We'll see a different kind of decomposition of a balance sheet over on Alpha Spread here in a second. Dividend, 3.47%. Now I want to have a wee look. This turquoise line represents their dividend per share. It's been climbing year on year for at least the last decade. Now it did have a tiny bit of a dip there into 2022. But it is forecast to recover and to continue growing. They've always maintained a sort of 3 to 4% dividend yield over the last 10 years as well, which is, it's quite unusual as a dividend per share is growing, their yield's actually maintained. Interesting to see, to say the least. Down to earnings payout to shareholders, currently sits at 76%, and then cash payout is a pretty reasonable 64%. Now, I want to see their management average tenure, 4.5 years. It's not too bad. Alan Jope has been in the job for the last 3.6 years, which means he started just before COVID hit. What a bad time to be put into that position now. Of course, we can read a wee bit more into him. They give impressive write-ups in Simply Wall Street into the CEOs for sure. Now, leadership team, average tenure 4.5 years. We can see the board's much more experienced at 6.8 years. Ownership. Someone bought 3 shares of £125. I love how they have to disclose that as a board member, but 3 shares. Wonder what happened there. Accidentally opened his trading 212 and he just banged in 3 shares and was like, well, I have to fill out the paperwork for that one now. Institutions hold 67.3%. General public in behind at 32.1%. Top ones being BlackRock, Vanguard and Leverum Trade Charities Trust. I haven't actually seen one of them before. And we have Legal and General Investment Management. They've crept up in the past few videos now in 5th position. Okay, over to our next website. We have Alpha Spread, another great resource that I highly recommend you check out. Free plan on the free version. You can check up 3 companies per week. Gives you all of the breakdown here, as you can see. Now, intrinsic value gives Unilever a base case of about £60.45. Now, they haven't been that high in at least the last 5 years. So that's a 32% undervaluation. This is based off a DCF value, discounted cash flow, and relative value added together and averaged out. You can check out how those valuations work and how it's all calculated over here on AlphaSpread. A few other interesting things is they give fundamental analysis, they give financials, a different way of looking at the balance sheet compared to the likes of Simply Wall Street, if this is more your style, efficiency, and the Wall Street price targets. They also have the competitive landscape and a few of their competitors as well. Okay, over to the next free website. Well, Google Finance. Just put in ULVR stock or Unilever stock and it'll bring you up this really handy page. Comes with news. You can compare them to some of the related stocks over here and view their up-to-date financials. Also gives you the pay ratio, market cap, dividend yield, and a handy chart. Alongside news from many sources such as the Motley Fool, ITV, CNBC, and Yahoo Finance. And of course, Wikipedia and their company website. Great resource. Highly recommend you use Google Finance when having a wee nosy. Over to Dividend Max, another website that I use is specifically for the dividend. Gives you a summary when it's expected to go X, when it's paid, the amount when it was last paid out, and how many they pay per year. Typically 4 dividends, so they're a quarterly pair. Ex-dividend date, for anyone that doesn't know, is the date that you need to own the share the day before the ex-dividend date in order to be entitled to the dividend. So if you're looking at the 23rd of February 2023, you'd need the share on the 22nd, preferably maybe even the 21st, just to definitely be sure that you're entitled to that dividend. You also put in as many shares as you were looking at getting, and it'll give you the previous payment alongside the next payment. That's with the premium version now. If you go to annual yields, you can see a wee handy chart to see the percentage growth per year and the declared forecast. Normally it does forecast them. So as you can see, they have been just slowly growing. So the next payment, if you put in 100 shares, it is likely declared on the 9th of February. It's very likely if you had 100 shares to get £37.22, give or take a few pennies from that, provided, obviously they continue the same dividend. Last but not least is, of course, Trading 212, the stock brokerage that I use. Gives you another breakdown of Unilever. When the market opens, you can set alerts, watch lists, and it gives you another breakdown alongside advanced charts for you to look into the company. Be sure to check it out if you are interested. And with that, thank you for watching, and I'll see you all in the next one. Let me know, is Unilever in your portfolio? Do you have stock in it? What's your favourite product? Mine personally, White Magnum and the real Hellmann's mayonnaise. You can't really go wrong with it. So I'll catch you in the next one. Thank you.